All right, welcome back everybody to the deep dive. Today we are going to be diving into Verizon stock, trying to figure out if it's a good buy right now. We've got a great article here from the Motley Fool. Is Verizon stock a buy now? Published on November 10th, 2024, just a couple days ago. Verizon has been doing pretty well. Their stock price is up. They've been increasing dividends for 18 years straight. And that forward dividend yield is a pretty tempting 6.5%. So does that mean you should buy the stock?
Well, those numbers definitely make you look twice, don't they? But as with any investment, you always want to look a little bit deeper. This Motley Fool article goes into Verizon's recent move to acquire Frontier Communications for $20 billion, which is a huge play to expand their fiber optic network.
It seems like they're trying to really capitalize on the need for high-speed internet. You know, all the video calls and streaming that everybody's doing these days. And honestly, fiber is really the best when it comes to speed and reliability. Okay, so Verizon's making a big bet on the future of the internet, but is it the right bet? Frontier already operates in 25 states. So this acquisition would bump Verizon's fiber footprint up to a total of 31 states. That's most of the country. And Frontier's third quarter revenue was up 4% year over year, hitting $1.5 billion, driven mostly by fiber adoption. But on the other hand, you've got Verizon's Fios service, which is also fiber, that brought in $3.2 billion. But that was flat compared to last year. So is Verizon just playing catch-up here? Or is there something else going on?
Yeah, you've got to wonder why Verizon's Fios revenue isn't growing like Frontier's. Maybe they see this as a way to accelerate their fiber rollout, especially in areas where they haven't been able to get it going as quickly. Maybe they're trying to jump ahead of everybody else and become like the fiber provider. But the article does raise a good point. How is Verizon going to pay for all of this? Well, it looks like they're going to be financing this acquisition with even more debt, on top of the $126.4 billion in unsecured debt that they already have.
$126.4 billion. Wow, that's a lot of debt, even for a company as big as Verizon.
Yeah, it's a lot. And here's the other thing. Frontier isn't debt-free either. They're bringing over $11 billion of their own debt. Plus, Frontier is currently operating at a loss. Their Q3 net loss was $82 million. So Verizon not only has to deal with all this debt, but they also have to figure out how to make Frontier profitable.
Okay, this is making me a little nervous now. Can Verizon really handle all of this debt? Can they even afford to keep expanding the fiber network? And what does it mean for their dividend?
Yeah, those are the big questions. That's why you have to look at their free cash flow. Free cash flow, or FCF, is basically the cash they have left over. After covering all of their expenses and investments, it's like their financial wiggle room. So far this year, their free cash flow is $14.5 billion, which sounds pretty good, but it's actually down just a bit from last year.
So is that dip in free cash flow a sign of trouble? I mean, it's not a huge drop, but it makes you wonder if they're pushing their limits a little.
Right. And then you add in Frontier's negative free cash flow of $81 million in Q3. That's not helping. It's definitely a risky move to buy a company that's losing money. It could really put some stress on Verizon's finances if they're not careful. They're really betting on being able to turn Frontier around quickly and start generating positive cash flow, but that might be harder than it sounds.
So there are definitely some risks here. But let's not forget that Verizon's main business isn't fiber, it's mobile wireless.
That's right. That's what they're known for. And that part of the business is still doing really well. Their mobile revenue in Q3 was $19.8 billion. That's up 3% from last year. Their Fios fiber service brought in $3.2 billion, but that's actually pretty small compared to their total revenue of $33.3 billion for the quarter.
So are they hoping that this fiber expansion will actually boost their mobile sales? By bundling fiber internet with their mobile plans, maybe they think they can create some really loyal customers that way.
That seems to be the idea, to be like a one-stop shop for all of your internet and phone needs. But it remains to be seen if it will actually work.
So we've got a lot to consider here. This big move into fiber, potential financial problems, and a mobile business that's still pretty strong. So what does it all mean for people who are thinking about buying Verizon stock?
Well, that's where things get really interesting, and that's what we're going to be talking about next. Well, the Motley Fool article says that right now might not be the best time to buy Verizon stock. They say that Verizon stock is trading at a pretty high price-to-earnings ratio, higher than it's been in recent years, actually.
And for those of us who aren't stock experts, could you remind us what exactly that means, that price-to-earnings ratio?
Oh, yeah, sure. It's often just called the PE ratio. It's basically a way to measure how much investors are willing to pay for every dollar that a company earns. It's kind of like if you're buying a rental property. You wouldn't just look at the price tag, right? You would also think about how much rent you could get from it. The PE ratio is similar to that. It gives you an idea of how the market is valuing the company. and its potential for future earnings. So a really high PE ratio. That could mean that investors are super optimistic about the company, and they're willing to pay more for the stock.
Okay, so a higher PE ratio. That's not always a bad thing. But it does mean that you're paying more for each dollar of those earnings. And so with Verizon, it sounds like the article is saying that the current stock price might be a little bit too high.
Exactly. They're suggesting that maybe the market is getting a little carried away with all this excitement about the fiber expansion, and maybe they haven't totally thought about the risks involved. They recommend waiting for the price to maybe drop a little. Especially if you're mainly interested in that dividend income. The stock has actually already dropped a bit from its 52-week high. So there's a chance it could go down even more.
So it's like they say, patience is a virtue. Okay, but let's think about this from the other side. Verizon's a huge company, right? They have a great track record, they've been around forever, and they haven't missed a dividend payment in almost 20 years. So couldn't you argue that Verizon's a pretty safe bet, even with all of this debt?
You could definitely say that. There are definitely some good reasons to invest in big, stable companies. But you have to remember, even the best companies can make mistakes. Especially when they make big changes like this acquisition, you really have to weigh the positives and the negatives.
Right. Nothing's guaranteed in the stock market. This whole thing is making me think, though, is this fiber expansion really just about becoming the biggest internet company? Or is there something else going on here?
It's really interesting, actually. It almost seems like this move isn't really about dominating the whole internet market. Maybe it's more about strengthening their mobile business, which is where they make most of their money. By combining fiber internet with their mobile plans, they can offer a whole package and make it harder for people to switch to a different company. It's like they're protecting their main source of income.
Ah, that makes sense. So they're using fiber to make their mobile business even stronger.
Yeah, you could say that.
That's pretty smart.
But it does make you think, what if some other technology comes along? Something that's just as fast as fiber, and maybe even cheaper. What if fiber becomes, like, outdated?
Whoa, that's a really good point. What if everyone starts using 5G or satellite internet?
Yeah, exactly. I mean, Verizon is going all in on fiber. But technology is always changing, right? Things could be totally different in a few years.
Yeah.
And then all that money they spent on fiber could actually end up hurting them.
So basically, Verizon is taking a big risk that fiber is the future.
That's right.
So what does all of this mean for our listeners, the ones who are trying to decide if they should buy Verizon stock?
Well, I think it just shows how important it is to look at the big picture, not just the numbers. You have to think about the technology and how things might change in the future. It's about being informed and knowing about the risks and the potential rewards, and then making a decision. That's right for you.
You're right. There's no magic answer. But you've given us a lot to think about.
I hope.
We've got to think about the good and the bad with Verizon's fiber plan, and think about what might happen with internet technology in general.
Well, on that note, I think it's time to wrap up this part of our deep dive. Okay, so we've talked about Verizon's financials and their big move into fiber and all the risks and rewards that come with that. But before we go, I think it's worth taking a step back and thinking about the bigger picture. Do we really think that fiber is going to be the main way we get internet in the future? Or could something else come along?
You know, that's a question I think about a lot. On the one hand, fiber is amazing, or it's super fast and really reliable. That's why it's so popular. But the problem is it's really expensive. And it takes forever to actually install it everywhere. You have to dig up all these trenches and lay down miles and miles of cables. It's a huge project. So it just makes me wonder, is there a chance that something else will come along? Something better that could change everything?
I see what you mean. What about 5G? I keep hearing about how fast 5G is, and it's wireless, right? So maybe that could be a good alternative to fiber. Yeah, 5G definitely has potential. It's fast, and you don't need all those cables. But it's not perfect either. There are still some issues with 5G coverage, especially in places like the countryside, where there aren't as many cell towers.
So maybe 5G is good for some people, but not everybody. What about that satellite internet stuff, the kind where they launch all those satellites into space?
Oh, yeah. Satellite internet. That could be really interesting, especially for reaching people in far-off areas where it's really hard to build regular internet infrastructure.
But satellite internet has its own problems too, like lag. And sometimes bad weather can mess it up.
So it sounds like there isn't one clear winner yet when it comes to the future of internet technology.
Nope. It's still up in the air.
Which means Verizon's big investment in fiber could end up being a really smart move or a really bad one.
Exactly. If everyone sticks with fiber, then Verizon is in a great spot. But if some other technology becomes more popular, then they might be in trouble.
Well, I guess that's what makes investing so exciting. You never know for sure what's going to happen. That's right. But that's why it's so important to do your research and think about all the possibilities.
Okay, so for our listeners out there, the ones who are trying to decide if they should buy Verizon stock, I think the big takeaway here is there's no easy answer. You have to understand the company's plan and the financial risks, and you have to think about what might happen with technology in the future.
And you have to think about your own goals, too. How much risk are you comfortable with? What are you hoping to get out of this investment? There's no right or wrong answer. It's all about what's right for you.
Well said. I think we've given our listeners a lot to think about today. We've really gone deep into Verizon and the future of the internet.
Yeah, it's been a great discussion.
Thanks for joining us today on the Deep Dive. We'll be back next time with another deep dive into a different company. Until then, keep learning and keep investing.